Computer. All right, everyone, how you doing? This is Miguel Solar and Kenny Harris over at First American Exchange, and welcome to the First Take series, where we don't pause, we don't re-record. If we goof up, we mess up. It's on like a live stream here, so you're going to get the live cut of this version. So I want to thank you for taking a quick minute here. We're going to talk about 1031 exchanges. And I brought what I feel is the expert in the business. Ken literally has a corner on the market with First American. And I wanted, Ken, why don't you go ahead and introduce yourself and share with us real quick what you do.
Yeah, thanks, Miguel. I am Ken Harris with First American. I do the 1031 exchanges for First American. We act as a qualified intermediary in the exchange transaction. So I don't focus on title. I don't focus on escrow. It's strictly the 1031 exchanges. And we get assigned into the transaction and handle the 1031 exchange transaction to help the clients defer their capital gains tax.
Yeah, and you know, Ken, you've done an incredible job. I've been in the business for 20 years, since 1999. How long have you been in the business?
I've actually been with First American since 1994.
1994.
Yeah, and I've actually been doing exchanges since 1999. So I have experience being behind the desk as most would look as an escrow officer. You know, I've been an escrow officer actually previous to that with First American. Then 99, I went over to 1031 exchange and ran a desk as an escrow officer would, but on the exchange side of things. And then in 2008, I moved out to the field and when everything crashed. So I went out to the field, let them know First American's still financially strong and here and doing 1031 exchanges.
Yeah, so I would consider you as an expert in 1031 exchange. In fact, every client that I have that's in a 1031 exchange scenario, and by the way, our audience here, this 1031 exchange information, I mean, I don't know if we need much of an introduction to it. If you own rental property and you sell a property, there could be some tax consequences. So why I have Ken here is just to talk about a 1031 exchange to defer that. And on top of that, now there's the coronavirus, the pandemic, which is kind of messing up the way these transactions typically are going. And that's because, and my guess, Ken, I'm going to let you talk about this a little bit more, but my guess is as we see sellers pull back some of the homes that they're going up for sale that we normally would have seen in February, March, and April, maybe they're not ready to put it up for sale until May or June. Now the people that have already sold in the early part of the year have no properties to replace it. So my guess is they're extending these rules out. What can you tell us about a 1031 exchange and generally how that works? What do we need to know about the time frames to identify and close? And I'm going to let you run with it. And what do we need to know about the extension now that the government's giving people?
Okay, so in a 1031 exchange, your time deadlines are the most stressful part or the most important part of a transaction. So upon the close of escrow of the property you're selling, you have 45 days to identify what you're going to purchase and 180 days to close escrow on what you're going to purchase through the 1031
When you say
exchange.
45 days to identify, what does that mean?
So identification does not mean you have to be in escrow or in contract. So technically, I provide an identification form upon the closing of the sale, and really they just need to submit that back to me by day 45. But the problem is if you identify on day 45 and you don't have an offer in or an accepted offer or something in escrow, you cannot change your identification after day 45. So you almost want to be in escrow on something prior to day 45. You don't have to be. If you feel confident you could get the property or properties you identify, you know, you could actually identify on day 45, go put an offer on day 100, and as long as you close that by day 180, you have a successful 1031 exchange. The problem is everything's changing. You know, it's hard. I always say the best 1031 exchange is you close today on the property you're selling, close tomorrow on the property you're purchasing, and you're done with the exchange. Right. Now you're not worried about being able to purchase what you identified by day 45, and it's after day 50. So they do have the ability to identify more than one property. So in any exchange, you could always identify up to 3. So, you know, sometimes you're buying one, you could identify 3 and have a couple backups.
So always identify, get you a list of properties that you want to replace the one that you sold, right? Yeah. And you're identifying that property. And then from the day you sold your last one, okay, so say like we closed escrow, I don't know, February 1st.
Yeah.
You've identified a property inside of the 45-day window, and then how long do you have to close escrow on that on the sale of your property, your investment property that that you sold out on?
You have 180 days to close escrow. So what that takes you, what, to July 1st, maybe?
Okay.
Yeah, so 180 days. If you close February 1st, July 1st?
July, I think it's August 1st. Yeah.
Okay, August 1st. Okay, so you have 180 days to close escrow if you close on February 1st, from February 1st. So a lot of people think it's 45 days plus 180.
Yeah.
So it's not 45 plus 180. It's they both start the date of close of escrow. So if I close February 1st, I have until, let's call it March 15th to identify,
Okay.
and then 180 days from February 1st to close what I identified by March 15th.
Got it. And I stand corrected. It's not August 1st. It's a 6 month because we're counting the full month of February, March, April, May, June, July. So would that be all of?
We'd be somewhere in the beginning of July.
Okay. Got it.
Yeah. Yeah.
Got it. Okay. So identify in 45 days, close in 180 days. Super important. As the owner, you have to find an intermediary, which is First American. That's where you come in, because they can't receive any of the money. What happens if they receive the money?
Well, then it becomes taxable. So one of the main things you want to get me involved in this prior to the close of escrow. So from your job, if you have a client that's thinking about doing a 1031 exchange, you really want to get me involved in talking to the client even prior to entering escrow and accepting offers on the property that's being sold.
Right.
We want to make sure it makes sense for them to do a 1031 exchange. We want to pull in their CPAs and make sure they're saving enough on taxes, or if it makes sense. A 1031 exchange is a tax deferral, as you mentioned before. So you're not getting rid of the tax, you're just pushing it down the road. So I like to say you're kicking the can down the road till you kick the bucket. So most of my clients' game plan is they defer until they die. So if I've been deferring all my life and I have $1 million gain sitting there because I deferred $100,000 10 times, if I sold that property, I'd probably have in excess of $300,000 tax consequence.
Ouch.
But upon my passing and my kids inherit the property, the basis jumps up to the value of the property the date of the death, and they could sell it at zero capital gains consequence.
They can literally sell it the next month then, right?
Yeah, absolutely.
That's
next
amazing.
month, and that's ideal because there's no capital gains tax.
Right.
So what you don't want to do is have a client that is maybe inherited the property and just assume they don't need to exchange. But what if they own the property for 10 years since they inherited it? There still may be a gain there they need to exchange.
That makes sense.
So if you sell it fairly quickly, so if you sell it fairly quickly, there's probably not a gain, or if there is a gain, it's probably small and they'll just pay their tax.
Or even if you sold it a year later or 2 years later and there was nice appreciation on the market, well, you're going to take it from the time that you inherited the property to those 2 years, and you'll pay capital gains on whatever appreciation there may have been. Talk to your CPA about that.
Exactly. So,
all right.
Yeah.
So let's throw a curveball. We have the coronavirus. We have extensions. And by the way, I'm going to just let the group know, we're going to put the slides that you gave me. I'm going to go ahead and put those online and just have it downloadable because I think they're very informative. Tell us about what the extension's all about.
Okay, so the COVID-19 extension the IRS gave us, it's not my favorite extension that they've given. Let's go back to your sample where we closed escrow on the property, the relinquished property, on February 1st. I actually just talked to a client about this actually right before we got on this Zoom call. So February 1st, close of escrow date, we'll say March 15th is the 45-day deadline to identify. And then July 1st is the deadline to close escrow. Well, the extension gave us for 1031 exchange says any deadline that falls within April and July 15th will now be extended to July 15th.
Yeah.
So if that close of escrow date, or the 180th day, I should say, falls on July 1st, they actually have now till July 15th to close the acquisition of their identified properties. The problem with that is they cannot go back and change their identification that they had to submit by March 15th because that deadline did not fall within the April 1st to July 15th deadline.
Okay, so let's look at this. From April 1st to July 15th.
Correct.
Okay? These are that's the extension that the IRS has given us, right?
Yeah.
So if you had identify somewhere inside that April 1st or July 15th, how much you got an extended time in there?
You got an extended time to July 15th. So let's say you're
identifying.
45, yeah.
So let's say, so in essence, you might have 2 months to go identify.
Yeah, because let's say today was your 45-day deadline to identify. April, what's today? April 22nd, right?
Yeah.
Well, since today falls between April 1st and July 15th, you actually now have till July 15th to identify. But so your current clients that are in an exchange can benefit from that. And actually, if you're closing anytime prior to June 1st, you still benefit from it because your deadline date, you get a few extra days to identify. Because if you close June 1st, let's assume June 1st, your 45th day is July 15th. So right now, if you close May 1st, your deadline would be June 15th to identify. But now you get that extra month because you close May 1st and your deadline falls within the April 1st to July 15th period.
Got it.
So some future closings will still benefit from this current extension. Now, whether they change, or let's say this carries on in 5 months down the road or 3 months down the road, we're still locked down. Will they issue another extension? I don't know. At this point, it's the IRS. So it's something they may do, but right now you just got to live with the extensions they gave us.
So if you're in an exchange scenario right now, basically what the IRS is giving us is, or giving them more time to identify a property and more time to close it out.
One or the other.
Yeah.
One or the other. So you won't fall. See, in previous extensions they've given us 120-day extensions of both the ID date and the deadline date to close. And those extensions were more centralized, like the California wildfires. Yep. So if you were affected by those and that zip code or those zip codes, you received those extensions. Go back to Hurricane Katrina. Those things, there was extensions issued in the Louisiana area, Texas, or Mississippi. This is the entire United States. So this is kind of different. It's something we've never seen before, or at least since I've been doing the last 25 years. So you can only extend one or the other. So your 45 days either goes to July 15th or your 180 days goes to July 15th.
Got it. Okay, well, I'm going to put the slides up so people can actually see it. I wish I would have used the dates that were on the slide so it makes more sense, but I think it's going to be pretty self-explanatory. I'm going to ask you to call Ken. Ken, what number can they reach you at if they had any questions about this?
Best number to reach me would be my cell phone at 818-307-0085. And I do believe it. I think my information is on the slides too when you send that out. Is that correct?
It's on the first page, so I'm going to include that for everybody. You can always call me and text me, or just text me right above here, Miguel Solar with RE/MAX. And I just got one last question here. This epidemic, this pandemic is literally worldwide, which when you said something about exchanging in the United States, I'm just curious, can somebody exchange a property out of the United States and say purchase an investment property in another country? Does that qualify?
No, you got to buy like-kind property. So you got to buy real estate within the United States that you're going to hold for investment. So we did have one deal many years ago. A guy went to the IRS, got a private letter ruling, and exchanged into the U.S. territory of the Virgin Islands.
Oh,
so there is some U.S. territory that has actually worked before, but that's very rare in a gray area. Right. That's something we'd want to pull in their CPAs and their attorneys to give them advice whether it would work or not. But if you're within the 50 states, any of the 50 states, it's acceptable for 1031 exchange.
Okay, so out of California up to Alaska, whatever it is, Hawaii, you're good to go. Okay, I was just curious. Curious about that. Hey, Ken, I know you're busy. I appreciate you taking your time, and it looks like you're safe and bunkered down at home and just working out of your kitchen.
Exactly. That's exactly what I'm doing.
All right, but I appreciate your time. Everybody, thanks for taking time to watch. Stay healthy, stay safe. We're going to have more of these great videos, educational videos, just to give you basically what's relevant today, what's going on with today's market and how the pandemic is affecting real estate and what positive things we can pull out of it, because we need to know what to navigate through to get through it, right? So thank you for taking the time to watch, and we'll update you with some more information. Take care. Thanks, Ken.
Thank you, Miguel. Thank you, everyone.